So let's look at the structure of gold on monthly time frame. Monthly. So the price action is going to be picked from 1978. So we want to see price has formed a double top structure here. Break of the neckline of the double top structure. You can see the double top there. Break of the neckline. Price came back, retest, and we see a drop and create a trend on that double top on monthly TF. So we're going to replicate that price action and follow it till the very end. I want to pick the neckline of the double top and the second retest on monthly TF. So I want to put some things for clear understanding. On a monthly TF, we have established this on a monthly TF. And after we broke structure, a broken support structure becomes a resistance structure. I also want to put that down. In 1981, and the price returns again on that same trend, uptrend, in 2011. So technically, our trade impetus from the rally started from 1978 to 1981 and 2011. These are the two areas that have provided us an ascending trend line, ATL. But that was an ascending trend line on a monthly TF. So technically, you see there is a breakout here. After that breakout, that was a confirmed bar on a monthly TF, the breakout from that trend and price return. You can see a breakout there and a return, a purported return. Look at the structure. So let's it broke out, came back, and moved up. And technically, when price broke the neckline of that double top structure, let me also put this into context. If you have a divergent view, come to the comment section, and this is a neckline. So it's not just it's on a neckline and at the same time an ascending trend line respecting a double top structure in 1978 on monthly TF. The market is well calibrated and this is a double top structure. A bearish price action. Shortly after that, we've seen what happened from 1980, 1979, that 1970 era, from 78 era price from the double top structure into 1980, gold fell into $256.36 per ounce. And that was the final kiss to bearish drop, and the bulls defended that level firmly, 2559.59 in 2001. That was the end of that bearish era for gold and the beginning of a rally. and call it beginning of a new dawn. It's an awakening era. So you have seen it, and that is what it is. And to trace the descending trend line that have created a very beautiful pattern and a breakout from that structure to give leverage opportunity to those who didn't catch the 2011 opportunity. They had an opportunity here too after price broke out of structure, followed by a retest, and we have seen a clean break and retest on monthly TF, providing another level of entry opportunity to those who missed the first one. So this was a nice opportunity. If you missed the first one, the market came back, presented an opportunity after creating three supply roof on monthly TF. Supply roof 1, a retest candle and resistance becomes support on break of structure. Resistance becomes support on break of structure in 1983. Resistance becomes support in 1981. And price return here in 1994. Breakout of structure, a broken resistance structure became a demand floor and RTSR in 2005. And that was it. And price has gone. So this also provided another buy leverage opportunity to those who missed out again, give an opportunity to enter if you are trading structure. If you are a structured trader, this is for you. If you are not a structured trader, you are not going to be in the picture. Look at what price I've done here. RTRS1 in 1981, RTRS2 1983, RTRS3 1987, 2004, breakout of structure, retest 2005. Entire of 2005 was a final retest and a call for long position, and the price upswinged and moved from there. So this is technically what the market is all about. And so let's take our line chart, and if we place from this cruise, we place on this trend and we put it on this range to complete this channel. This is a bullish channel. This is the breakout. This is the floor. Price formed a double top structure, break of a neckline. We retest 1, retest 2, and technically price is coming back to retest the broken neckline to this previous double top in 1978, in 1980, 1981 price action. Technically, logically, this should hold. So if you look at what price have done here, it gives you here a sniper entry 5,600 and 5,655. The price action was well scripted, well calibrated, and you have seen that the market follow a mathematical pattern. It respects trend angle, and that is why sometimes Fibonacci even works at the first place. That is why even Elliott wave was brought in here. These are all mathematical strategies, so it's trading is designed by mathematicians, and they follow set of rules which in addition to the said emotion of buying and sellers, market follow a strategy which is a little bit mathematical, and they use it to create cycles and pattern. So this is what I see here, and this is another thing to buttress my point, and I do hope that you find this very interesting and insightful. So this is a neckline to this very double top from a line chart perspective. So this is not AI, this is real life trading. So what I see here technically is on a monthly time frame, there is no support for gold. Let us be very honest. It's not about an emotional thing. It's not about whether the Chinese central banks are ramping up yen gold backing. The question is the entire gold reserve of the world. China cannot accumulate all of them. Yes, no matter how it's a $1 trillion economy, but they cannot buy all the global gold. If they buy all, the global financial system is still going to find a way to play around them. And dollar hegemony is not going down anytime soon. As much as we are all crying about dollar hegemony and the end of the dollar era, I can tell you for free, the United States global power in financial system is going to last for a very long time, maybe in the next 50 years, because it's a superpower and its military might and advanced technology export remains its selling point. And while China has some level of advancement, they still have a lot to catch up with United States. So the US dollar still have a strong leverage in the financial market. Who drives the market? It is New York session. You have never seen that the market move because a yen session. I always watch Asian session and see how slow the market move. I always watch Australian session. But what happens when we have London and New York session come together? Come to the comment section and tell me. So who drives the market? Who drives the market? Who has the power? So as much as we have hypes of Chinese central bank ramping up yen gold relationship, the dollar power is not going down anytime soon. So what I see here, gold is traded in USD, silver is traded in USD. I want to see a potential pullback into where we have a monthly support. This is where we have a monthly support around 3,394.755 for a return into 6,000. Gold could technically tap 6,000 and maybe possibly exceed from there. It is possible. So this is the trend, and this is where we have demand after break of structure on a monthly time frame. Remember, this price action is pulled out from 1978, 1976, 1980 price action. This is where you have a genuine monthly support. And a monthly support is stronger than weekly support. Weekly support is stronger than daily support. Daily support is stronger than intraday support. So it follows by hierarchy. The higher your time frame, the more advanced you are, the more stronger you are. It's just like you bring a yearly support. Yearly support, of course, is stronger than quarterly support, while quarterly support is stronger than monthly support. So it tells you the sentiment that is driving the market and their perspective. So what we see here is a double top. We break off the neckline, we retested it one, and you can see what happened here. This buying candle didn't come back to retest the neckline again because it got short by the supply roof of the first retest of the monthly candle that tested the broken neckline. That was why this candle didn't get back to kiss the ascending trend line, and it fell from there. It fell from there. So we are not going back to that crash era due to the immense benefit and um, the presence and the power of yellow metal in a good in banking, liquidity reserve. So this is what I see technically, that we could have a pullback into where we have a genuine support. Where we have a genuine support is around 3,375, 3,377, and maybe something thereabout. So except the market wants to flip the script. But from what I've seen here, from the strategy you see here on a monthly time frame, an M structure, breakout of the neckline of the M structure, and you see price have tested it twice. The neckline has been tested twice, and the neckline has been broken in 2025. So this is the break of the neckline on this ascending trend line, and it came back and respected it for a couple of months. We had consolidation on that ascending trend line, and shortly after that, price have left. The key thing to note is the trend angle. The trend angle is the same. When we cloned it and placed it here, we had a beautiful drop without any headache. You see the way price dropped on its own. It dropped simply. I'm not making this up. This is the structure of the market. My duty is to interpret the structure. So if the market flips it and does something different, it's not up to me. It's not my fault. My duty here is to interpret the structure the way I see it on a monthly time frame. If you have a divergent view, please let me know. And so where we have a genuine support is around here. And the next place we have genuine support is around 2,607. I don't see that happening. But however, the market can do whatever it likes. This is where you have a genuine support to hold price around 2025 May. This is where you have a genuine support. You can look at it from the line chart, a falling candle, rest, and upward bullish thrust. So If the market does something different, that is not my making, that is not my fault, and it's not up to me to decide. So this is what we see, and technically, I do hope that everyone finds this monthly chart very insightful, and let's see what it does from there. So this is what we have for now, and this is what I see, except the market wants to reverse and just go from there. And we have a strong one weekly rejection and also a monthly rejection here. You can see this candle in the month of October 2025. We have a weak rejection candle and the body of the candle. So who knows if this will present a support structure for reversal. So no one can actually tell. There is a structure here at 4017. At 4017, look at the weak rejection, look at the strong candle weak rejection, look at the body of the candle, look at the weak. This signifies support. This is a strong support on a monthly TF. You're not going to see it, but the candle close and the candle open already giving us a signal on a monthly time frame that 4017 is a support structure. From the way the candle rejected, just like the way this candle rejected here in March 2026, also tells us that this is also a strong resistance to upswing. And you see what happened shortly after that price broke up from there, retested it, bearish continuation. In the future, this candle close and candle open uh, will also be put into consideration. So this is what we see right now on monthly TF, which is the most advanced and the most respected time frame in trading gold. Not just gold, any asset class. The monthly time frame has special preference, and it gives you an overview, a clear overview of the direction of the market. So this is what we see, and I do hope that the market will flip it from 4017 level. But if you are looking for a genuine candle drop on a trend, this is an ascending trend line from the breakout of the neckline of the double top structure in 1978, 1980. It has been retested in 2011 and we got broke out in 2025. If price returns here into this area, it will not be justified until price returns into where we have a retest to a broken trend line. So this is where I find very, very insightful for a potential rally. If you're actually looking out for a rally, this is where you should get it. But for price to fall here, that would be an invalidation of a trend. So if price falls into this area, then we are setting up for bearish continuation because it will go back, retest a broken support structure and drop. That's not going to be possible. That's not going to happen, because the major holders are central banks and they are just using it as backup. So, I mean, this is not going to happen. But if it happens, that is what trading is all about. But I don't think anybody has a capacity to crash the price of gold into 2,602 level. Nobody has a capacity for now. Nobody has a capacity. So except the global financial system twist, then but for now we are watching, and I do hope that we get a reversal at where reversal is due. So ideal thing 4017 is showing a very strong support on a monthly time frame. It's showing a very, but if we are looking at where a red candle found a genuine support, it's around 3,385, 3,350. That is a zone that which we are going to look now on a daily time frame. I will cycle it within that area and find out what really happened in that area. So, but that doesn't mean the market cannot continue to flip, but it might likely on a good day come down to that area to seek for support before we can see genuine rally in the price of the yellow metal.